Hello, thank you for tuning in. I'm Danielle Pagazzi, a contributing editor with American Banker. Today we'll be speaking with Melanie Fisher, Financial Consulting North America out of EPAM's Toronto office. Melanie is an accomplished technology executive with extensive experience in designing, developing, and delivering projects and programs across industries. She is the co-lead of partnerships for EPAM Financial Services North America business. I also have with me today Doug Woolridge. Doug is Vice President of Financial Services and co-lead of financial partnerships in North America at EPAM. Doug has extensive experience in digital banking, banking as a service, wealth as a service, open banking, and digital payments, spanning verticals including banking, financial services, and fintech. Welcome to you both today, and thanks for joining us. Doug, why don't you get us started by giving us an overview of EPAM?
Thanks, Danielle. Since 1993, EPAM has leveraged its software engineering expertise to become a leading global product development, digital platform engineering, and top digital and product design agency. EPAM's global team serves customers in more than 40 countries across North America, Europe, Asia, and America.
So, jumping right into our topic here, talking about financial services and digitalization, application programming interfaces and emerging standards are driving an ecosystem of fragmented service providers that disrupt the financial services landscape. I think we all know that now. Platform and aggregator business models are rapidly growing, and consumers are more and more willing to adopt services from all kinds of providers. Melanie, can you talk about how the leading banks compete in this environment?
Yes, thank you, Danielle. Happy to be here. So in order to remain competitive in a fragmented market, a bank leader needs to understand bank and non-bank competition as well as market trends. They need to choose whether they're going to compete head-on or partner with those competitors or otherwise risk disintermediation if no action is taken.
So as a lot of banks are working through this and thinking about it, can you talk a little bit about what trends you're seeing that the forward-thinking leaders are considering when they rethink their digital business models?
Definitely. Let's first talk about embedded finance. When a company has a strong core product, they want to build upon that stable customer base and naturally find ways to monetize those relationships. Now, utilizing APIs, application programming interfaces, to embed financial products into their core non-financial products, this enables them to provide seamless, frictionless delivery of products to their customers. Now, a key factor when considering embedded finance is who owns the customer relationship. When a bank allows external company to utilize their services, this shifts what is normally a one-to-one banking client relationship to a utility service arrangement based on accessibility, price, and experience. That may seem to some financial institutions as a threat, but if you're ready to adapt, it is a strong opportunity. Let's talk about embedded finance, the examples of. There's payments, loans, investments, insurance, and banking. The most well-known example of embedded payments is Uber. Let's talk about embedded lending, otherwise known as buy now, pay later. This is where a customer applies for a loan at the time of purchase and breaks up that purchase price across a number of payments spanning a period of time. So 39% of all customers have taken advantage of buy now, pay later opportunities. So this is a significant opportunity for the banks. In order to take advantage of embedded finance, the bank's mindset needs to be changed as to who owns that client and the data. And they need to see it as a potential new revenue stream and potential access to new clients that they did not have before.
Doug, I want to turn this over to you. So software as a service has arrived on the financial services scene about 20 years ago. This as a service model has extended to just about everything you can think of. Banking as a service. Let's talk about it. What opportunities does it bring to the financial institutions?
Well, banking as a service, or BaaS for short, is an end-to-end business model that allows digital banks, non-banks, and other third parties to connect with full-service banking operations. BaaS includes the outsourcing of people, operations, processes, and platforms, as well as third-party banks. This is sometimes called a bank in a box, which can include onboarding, operations, credit scoring, call centers, regulatory compliance, adjudication, and more. And this can be a partial or a fully outsourced managed service. Now, as barriers to entries have been lowered for non-banks to offer banking services, an increasing number of new entrants have been offering these banking services along with their traditional lines of business. With the emergence of BaaS, this is causing a significant impact in the market. As bank disruptors become more ubiquitous, their customers are adapting to a new set of products, services, and access points. BaaS has been growing in Europe and Asia-Pac, where necessity is the parent of innovation. In North America, consumer demand is outpacing bank innovation. This has created an opportunity for non-banking disruptors and innovators to seize the moment and fill the growing consumer gap. An example of this is Pasadena-based branchless bank Green Dot. Joining the ranks of BaaS companies in 2019, the fintech's platform provides end-to-end infrastructure for managing a bank or payments at scale. And some of Green Dot's customers include Uber, Walmart, and PayPal. So, to be honest, banking leadership needs to act now. Business and tech-savvy legacy banks can fend off the encroaching threat of fintechs by moving into the BaaS space to share their banking operations, capabilities, and data for a fee. Banks will need new business models while keeping a watchful eye on their own brand. In most cases, that non-bank partner will own the client relationship. Meanwhile, the banks have created a new low-margin, high-volume venture that further monetizes their existing infrastructure.
Melanie, I want to switch back to you and talk about what has triggered the move to utilizing new core banking platforms and their extended ecosystems.
When a bank's legacy system is not able to extend to accommodate the increased demand for digital channels, it brings many organizations to the decision point of modernize or replatform. Replacing a core banking system is a risky and complex task. So many banks are choosing to replatform while using an ecosystem of connected fintechs to supplement the core. They choose this due to the composability, flexibility, and speed to market. Now, EPAM has partnered with a number of core banking providers, and our job is to understand the ecosystem segments and the fintech partners that fit into those segments that are applicable for that particular client, as well as the people, process, and technology to implement that ecosystem collaboration. Now, banking leadership should need to envision the size of the market beyond their core business, because extending their ecosystem, utilizing partnerships can bring about additional revenue streams. That being said, it's important to be aware that altering business models brings operating model challenges and change management challenges.
We're just running up on time here. I want to ask you both quickly if you have any final thoughts to share with us today. Doug, why don't we start with you?
Well, consumers don't necessarily want a bank, but they still need banking. And their tastes and preferences have changed. Legacy banks are going to have to adapt and adopt to a very rapidly changing landscape for them to succeed.
Melanie, do you have any final thoughts for us?
I'm just going to second what Doug has mentioned. If the financial institutions fail to address the market trends and adjust their operating model, they risk disintermediation, or at a minimum, they're going to miss out on revenue opportunities.
Doug, Melanie, thank you both for sharing your insights with us today. If people want more information, I think that they can reach out to you at epam.com. Thank you, everyone, for joining us today. Have a great day.